let's talk a little bit more about the whole adage here of sell in May. It doesn't seem like it's as straightforward this time around. It's looking a little bit more nuanced. How are you viewing things now when it comes to the price action and how we start things off this month?
Yeah, it's actually not that straightforward. So given the broader uncertainty, I mean, the kind of pandemic that we are facing is clearly unprecedented. And that's how, we expect the markets to be. So we do expect that the markets will remain quite volatile. But I think overall, we do believe that, we are still in the risk-on sentiment territory. Wherein overall for the full year, markets should continue to do well, with, of course, some choppiness in the shorter term. So it will not be your typical May month that we've, seen historically.
Yeah, you kind of wonder what could actually avoid this seasonal weakness, because there seems like markets are just infatuated by this whole talk of inflation picking up right now. We just got the South Korean numbers here today, looking very robust. And take a look at some other indications as well. I want to throw up a chart from one of our frequent guests, Ben Emmons. He actually projected the CPI projections through TIPS. And basically, he's saying that May is a month where inflation will actually start to peak. I don't know what your models are saying right now, Rupal. Is inflation peaking? Are we going to see prices moderate from here on forward?
We actually believe that, the inflationary pressures will continue this year, and that's broadly driven by the kind of policy action that we've seen globally. So we do expect that, inflation will continue from here on. And in fact, yield and inflation will be the key macro drivers for the markets, which is what we've seen since the beginning of the year, and in fact, going forward as well. I think these two will, clearly drive the markets and the narrative in the markets. And the kind of, dispersion that we are seeing in the markets in terms of different types of stocks holding different types of interest rate risk, I think that's how, that sort of matters in the current market, and that's how investors will have to position, taking into account, where the inflationary pressures are coming.
Rupal, I'm just wondering what you're making of VIX. VIX still low, but rising from 16 to 18 over the past month, rising in tandem with the S&P. I mean, that's probably suggesting that a correction is coming, isn't it?
I mean, see, in the shorter term, you can expect some bit of, pullback in the markets. But overall, I think the broader sentiment remains bullish. I mean, if you look at, globally, central banks, governments everywhere, the focus clearly is that we need to move to a more normalized world. More and more people get vaccinated, and hence, your broader reopening up or reflation trade, I think, will continue to, drive the market. So, the themes which have been relevant this year, which have been, your value rotation, I think all those themes will continue. There will, of course, be some pause in between, which is what we saw, say, in April. But I think overall, we are not really in that territory where we can say that the markets are in risk-off sentiment.
Is it fair to assume that the North Asian markets will outperform? They have the greatest exposure in terms of the U.S. economic recovery story. The likes of Korea, Japan, Taiwan are likely to remain the strongest markets.
Absolutely. So we remain quite bullish on, Asian markets, and some of these Asian markets like, Korea, Japan, Taiwan, even China, we remain quite bullish. There are, of course, certain types of stocks which could take a hit. For example, we still remain slightly cautious on the high momentum stocks in China. But I think a lot of that has been mitigated in the, since February. So the risk remains now shorter term. And I think broadly, where we are in the market scenario, my view is that, investors need to be slightly more balanced in their approach. So while they need to be more, cyclically bent, but it needs to be also have some bit of exposure to growth and quality. So it needs to be a balanced portfolio that, will help us navigate this uncertain environment.
Is India in that portfolio, Rupal? Because we continue to see the headlines here with record number of deaths over the weekend, 400,000 COVID cases confirmed yesterday in the country. And yet we see an equity market that just seems unfazed by these headlines. Yeah. Why do you think that is?
So I think, again, India, as I said, right, the broader sentiment still remains risk on. Yes, given the second wave of COVID being very, very strong, there is a need to add defensiveness to the portfolio. And our view is that rather than going full on defensive and getting into, say, high quality names, or completely into say healthcare or technology names, our view is one should look at more from a high yield perspective, which gives you somewhat of a cyclical defensive stance in the portfolio. And I think that will continue in the market. So in the shorter term, markets might remain sideways. There could be some bit of pullback, but I think, as I mentioned earlier, broadly investors are looking at it from the next, 6 months or so, wherein the world will become much more normalized. More and more people would have been vaccinated, and hence, your portfolios need to be positioned from that perspective.